Welcome to today's episode of Heard and Seen Around. I am Rajesh Karipurath. This is my take on macroeconomic and geoeconomic data points, which I find interesting. I hope you enjoy watching it as much as I enjoyed curating it. Cheers.
If money talks, mine mostly apologizes. Inflation is when your coffee costs more but still doesn't solve your problems. Success is a moving target. It travels first class. Optimism is refreshing the page and expecting different news. I don't fear change. I just prefer it happens to other people first.
Corporate India just shifted gears. Revenue growth for the broader sample is back near double digits in Q3 FY26, and net profit growth has bounced to around 14%. Strip out banks and finance, and the momentum looks even stronger, suggesting that this isn't just a lending cycle story. After a mid FY25 slowdown, margins appear to be stabilizing, and operating leverage is quietly doing its thing. Translation, companies are squeezing more profit out of every extra rupee of sales. If this trend continues, it strengthens the case for earnings-led market support rather than just liquidity-driven optimism. Even after last year's reversal, the MSCI India has comfortably outperformed broader MSCI emerging markets over the last 5 years, and done so with slightly lower volatility. That's alpha without the extra drama. Yes, valuations carry a premium, but that PE gap is now back in line with its own 10 to 15-year history. In other words, India isn't unusually expensive, it's historically consistent. Zoom out further and emerging markets overall have delivered respectable long-term returns. The real outlier has been China, where economic growth hasn't translated cleanly into equity performance. As of June 2025, the nuclear construction race isn't tight, it's lopsided. China is building 28 reactors, India has 6. Russia, Egypt and Turkey have 4 each. Everyone else is at 2. China alone is constructing more than the rest of the leaders combined. This isn't just a climate virtue signaling, it's about baseload power for AI, heavy industry and electrification at scale. Stable energy equals strategic leverage, and Beijing clearly got the memo early. Nuclear is making a comeback, but the build-out is anything but balanced. This is not your grandfather's agriculture story. India's farm economy is broader and more diversified than it was a decade ago. Agri and allied GVA growth has accelerated to 4.4% annually, up from 3.5% in 2004-2014. Not explosive but structurally sturdier. The real shift, livestock share has jumped from 23% to 31% of agri GVA. Fisheries and aquaculture are expanding fast, adding new income streams beyond traditional crops. Meanwhile, the crop share has moderated, a subtle sign that rural India is diversifying beyond cereals. In short, the farm sector is quietly rebalancing towards higher value activities. India's import bill still wears a petroleum badge. Oil imports remain the heavyweight, hovering around the 180-200 billion annualized mark. Energy dependence hasn't vanished. But look closer, electronics imports are also steadily climbing, now worth north of $100 billion annualized. That's smartphones, components, semiconductors, the hardware of a digitizing economy. In other words, India isn't just importing fuel for cars, it's importing fuel for data. Then there is gold, the quiet swing factor not shown here, but always ready to surprise the current account. In 2016, India's digital payments were barely a blip. Fast forward to 2026, and UPI volumes have exploded 83,333 times, making India the global heavyweight in real-time payments. The country now accounts for nearly half of the world's real-time transactions. That's not adoption, that's domination. What changed? Scale, smartphones, and a public digital stack that turned QR codes into everyday currency. While others debated cash versus card, India went straight to scan and pay.